Moving on to very quickly to our next leader who's here to educate you on can open banking and AI solve for India's financial inclusion charge. Let's give it up for Ms. Kamalika Poddar, lead data and product from super brilliant name that I've heard since morning is LXME, which is Lakshmi. Brilliant, brilliant. Ms. Poddar is a leading fintech expert and head of product at Lakshmi, India's first digital platform for women's financial empowerment. Can we have a big round of applause to that? What a pioneer with over a decade of experience in banking and fintech. She's a pioneer in digital lending and financial inclusion. Recognized as top fintech leader, Kamalika shares her knowledge through a popular blog and YouTube channel, the Fintech Chronicler. Ah, okay. So we have a YouTube star as well. Kamalika, is there anything that you can't do? What is this?
Well, not being nervous is probably on a stage like this is something I can't do, but yes, I think it comes with the stage.
No, yeah, nervousness shows that you're doing something important and we can see that. But Ms. Poddar, we eagerly await what a journey you've had. Fantastic. I am sitting there with pen and paper out, by the way. Thank you, Ms. Poddar. Stage is all yours.
Thank you for that very, very warm welcome. And yes, so I've been building fintech products before fintech was probably a cool thing and product was not even a domain at that point in time. It just that incidentally happened to stumble into both of them. And yes, I wouldn't have had it any other way. I think this has been a very gratifying journey for me so far. And some of the things that I thought I'll share today on this stage is, so my journey has literally been a series of being at the right place at the right time, and so I learned a lot of the right things. Like for example, back in 2016 when I was just interning, UPI had just been launched and I got to be a part of that product team as an intern. Then again in 2022 when account aggregator or open banking in India was not a concept everyone knew or heard of, I happened to volunteer and then ended up building a lot of what we see today on the account aggregator ecosystem. So I just thought I'll put all of those together because the one thing that India does really well is digital public infrastructure and making sure that the products that we build, the digital innovation that we do is incremental enough to reach every nook and cranny of the country. But one topic that's been very close to my heart despite being in the last 10 plus years in the industry, one thing that I've seen not happen is the fact that there are still so many pockets that are excluded from this financial inclusion journey. So that's kind of what I wanted to start off with. A brief agenda of, is it visible to the audience at the back? It is? Even if it wasn't, you'll have to adjust because I can't change the font size now, but yes. Anyways, so the first thing I wanted to start off with are a couple of numbers. The first one is despite, the government doing so much with the JAM Trinity, Jan Dhan, the accounts that we have over there and Geo and all of those coming in, despite that, we still have 11% of the adult population which is unbanked. Any estimates on what that number is for adult women without a banking account? Any idea? 19%. 19% of adult Indian women do not have access to a banking service or any sort of financial services. Also coming to the credit gap, now this is from 2022 where there was this nice MSME survey done where they showed that only about 14% of the loans that were actually reaching banks from MSMEs were being sanctioned, which leaves a credit gap for just MSMEs at 580 billion. And if it was an MSME that was women-led, that saw like a further decline in the acceptance rate. And capital markets, I think COVID has shown us so many people coming into the capital markets, opening a demat account. Even then, only about 18% of women actually have a demat account. And there was this interesting survey done to see how many women have agency over those demat accounts. That number came down to less than 5%. So what really is the reason behind, such sort of financial gap? I mean, on one side, we have the power of compounding, which is taking some people and compounding their wealth to such heights. And on the other end, you have people who are being left far, far behind. And unfortunately, with, the eighth wonder of compounding, it just means that for them to play catch up, it's going to be a lot more harder as we go down the drain. So this is probably the time when we should be talking about this and building something for them, which is also why the concept of Lakshmi was something so appealing to me that I decided to join a very young fledgling startup at the stage that I did. But yes, while these are some of the, India is a vast country, there are remote pockets which are not accessible, not reachable, we still don't have electricity in a lot of places. The biggest reason is that currently for any financial services to be disbursed, you need to have a physical presence. And that just means your cost to serve becomes a lot higher. Now these remote pockets are the pockets that actually need some sort of financial inclusion. They do not have the appetite to write up a big ticket check over there or apply for a huge, large amount of a loan. Their ticket sizes are very small, 5 to 50,000 at most. Which means that the margins that these financial institutions make, if they do, take this agenda up of serving them, those margins are literally not there. It's running in a negative, and no bank, no a capital market company is going to want to take up a loss on their books, even if it is for a cause that they really believe in. Which is where I think something like open banking, especially in India, kind of plays a very pivotal role. A brief 2-minute history on how open banking came about. So this was back in 2007, 2008 when the world was collapsing thanks to the global financial crisis and all of that. Policymakers realized that there are a small faction of financial institutions that have way too much power, and that causes a lot of systemic risk and market risks like what we saw happen at the GFC. So the agenda with open finance was to make sure that there's a disintermediation of this sort of a power over there. And it originated in Europe, and it's very interesting to know it was in Europe because 2008, 2009, Europe wanted to build out SEPA, or the single European payment area over there, and that meant building an ecosystem for countries that have such diverse set of rules and regulations. I mean, just on MDR, on the topic of merchant discount rates, the cut that you take, it varied all the way from 6% to 16%. There was no standardization whatsoever. So PSD, or Payment Service Directives, was like the first step towards standardizing all of that and making sure that everyone has at least one set of an umbrella sort of rules to follow in order to start integrating different financial services into each other. Fast forward to 2015, they realized that, these traditional financial institutions, instead of just following one law, can actually do a lot more if they open up the treasure trove of data that they have. Now, banks and traditional financial institutions have so much of data, but they're not really working hard towards making all their services hyper-personalized. Who's working hard towards it? These tiny upstart fintechs who are very tech savvy, but probably don't have that insights or the data about their consumers to build those insights. So that's why PSD2 came in, where the agenda was that you open up your ecosystem, your data, the data that you are building about customers, because honestly, that data is not the financial institution's data. It is really the customer's data over there. So if the customer does want to avail better services, who are you to gatekeep them? So that's how PSD2 kind of came in. And an implementation of open banking in India, open finance in India, is what we know as account aggregator today. Now, apart from opening up the ecosystem and ensuring that there is transparency and fairness of use and innovative use cases coming up with those data, there are two very critical functions that an account aggregator in India needs to do, which is, one, be a data conduit, which means that they have to ensure that the data that is coming in from financial institution A to a fintech player or end consumer B is fully encrypted, cannot be parsed or decoded by any other entity, and it is the complete data that has been requested by the end party. So that is a data conduit role that an account aggregator has to play. The second and much more important role for citizens like you and me is that of a consent manager. What is a consent manager? Well, maybe you've applied for a loan at a very savvy fintech company that's hyper-personalized the loan for you and given it to you at a rate that is unbeatable. But for whatever reasons, you've decided that you don't really want to take this loan up. But when they were going to underwrite you, you did give them your consent to read all your bank statement, your stock statements, and figure out what your net worth is. But today, when you're rejecting the offer of the loan, should you not have that right or that ability to tell that fintech institution that, hey, you know what, go back and delete my data, purge that data that you have from your ecosystem. That is, I think, a very underrated but very powerful tool that an account aggregator provides to you. The mechanism by which you can ensure that your data is actually safe and being used for the purpose that you wanted it to be used. I think I move like this. Yes. And any talk about the future of fintech is probably incomplete without the mention of AI. So what I thought I'll do here is run like a kind of a thought experiment, and I'm really glad that, you know, Devesh ji before me spoke so much about algorithms and AI agents and all of that. So I think my job has become a lot easier now. But yes, some of the use cases, so this is basically a diagram of how account aggregator works, and this I've taken it up from Sahamati, which is an ecosystem provider who is it's a not-for-profit organization which is meant to level up account aggregator ecosystem in India as well as provide the necessary educational tools. So this is like a representation of what an account aggregator can do. On one end you have the financial information users or the FIU, the information providers or the FIPs, the end user and the citizen, very important role that all of us play in this ecosystem, and of course the data conduit and the consent manager sitting at the middle. But okay, so now that we understand this ecosystem, let's try understanding some of the use cases that currently are there today and how do we use AI to level these up. One of the very interesting thing is on the MSME lending piece, and I think very personally close to my heart, because when GST as an FIP was going live on account aggregator, I was one of the product tech volunteers in making sure that all the kinks were, you know, kind of leveled out. This really helps in small businesses to get their profiling done by the banks and the financial institutions. And this is very important. Why? Because these MSMEs typically operate on a huge credit gap, like their working cycles are very bad. On one end, their suppliers always ask them, you know, to prepay their amount, and on the other end, the buyers that they have, they're probably large buyers, so they're going to tell them, give it to me on credit or else I find some other one. So for that, I think the GST data, especially with your bank data, supplements each other really well, because you can figure out how much of a working capital does this particular person actually need. Personal finance is very interesting, because just day before yesterday, I got the newsletter from Sahamati which said 78% of all the data that's being delivered through the account aggregator ecosystem is for personal financial management, which is huge, because it means that India as a country itself is actually becoming savvy enough to understand that we need to take charge of our money. We can't just outsource that to a relationship manager somewhere. So that was very interesting. And the third and most interesting place, which is still a work in progress, is on the alternative credit score, because when we're talking about financial inclusion, you can't just be giving loans to existing customers of credit bureaus. You need to figure out a good way to underwrite the customer's ability to repay, not willingness. Willingness is, I think even their mothers can't predict their willingness. But yes, you need to have a good way to underwrite their ability to repay, not just using their past credit scores. So when we add, so some of the challenges before we get into, you know, how AI can help over here. The biggest thing is I do hope that the DPDP Act gets a lot more refined in the future, because as of today, we don't really have a good recourse mechanism in case our data is not being used the way we intended for it to be. The second and most important thing, which I think is a big hindrance to the entire open finance, open data argument, is the lack of monetization avenues for FIPs. I mean, just take SBI for example. They're the biggest bank in India, and they have large infrastructures that they already have to bear the cost of. On top of that, you're telling them that, hey, you know what, we're not going to allow you to monetize any of these data that you're sending off the customers, because it was the customer's data in any ways to begin with. But you have to make sure that you ensure the quality, timeliness, and it has to be as real time as possible. It's a huge headache for SBI. Whereas if we just changed the conversation and told SBI that, you know what, we're willing to let you monetize this entire data conduit supply that you're acting as, that might have worked a lot better for them. But yes, so how is it that we are working towards all of this to make a lot of these a lot better? I think fair usage policy is something that even the government and the Ministry of Finance is keeping a very close eye on to make sure, because let's face it, India is not yet that literate or educated a country to know what our rights are. So it is up to the policymakers to make sure that there are adequate recourse mechanisms for us to ensure our data is being protected. There are enough templates that are being built out by industry participants to say if it is a PFM use case, this is how the data should look like. You don't need a data that's more concrete than this. And of course, the last thing is something that I was a part of, which is an industry dashboard for anybody and everybody to kind of view and figure out how is it that the industry is progressing. All right. So now is where I would kind of juxtapose AI on top of this, because AI runs on the power of data and account aggregators can provide a lot of data for you. So the first thing that I think is going to happen is we're going to see a move away from these large language models and move towards very small specific models that can even run on something as cool as the laptop Air, the MacBook Air that she was carrying around. The second thing is I think we're seeing a lot of AI being used for banks, for bankers, for traditional financial institutions, but that script is pretty soon going to change where we'll start seeing personalized AI agents. So now imagine that an AI agent is literally trained on Kamalika's entire lifestyle and the personality that she has. It knows about her income streams and it also knows what her long-term goals are, what her short-term aspirations are. This AI bot can actually take the entire human greed and fear out of the equation that makes us so susceptible to executing the wrong kind of trade despite all the algos that we have at our disposal, and it can actually execute it in a way that you don't have to worry about it. I think this will lead to the third thing, which is as we're able to increase the supply of this to a wider range of people across the different salary demographics or the wealth demographic that we have, margins for traditional financial institutions will also start getting better, that they'd want to participate willingly in giving that data to the ecosystem itself. So that was it about what I had in mind, and I think I made it right in time. So yes, I'm here if there are any questions.
We have time for one question. Is there one question? Ms. Poddar, we strongly believe if there are no questions, that means you left no space for any question to occur, because
or it was just so confusing that nothing it just went overboard.
Or that crystal clear. Ladies and gentlemen, firstly, Ms. Poddar, I cannot believe you lied to us. You lied about being nervous. This is you nervous? That's crazy. Ladies and gentlemen, a big round of applause for Ms. Poddar. What a session that was. And at the start of the segment, you mentioned about being at the right place at the right time. We match 50% of it. Somehow, I'm always at the wrong place at the right time. But speaking of places, ladies and gentlemen, very interesting. Ms. Poddar is a Bengali, brought up in Chennai, working in Mumbai.
Yeah.
So, Ms. Poddar, tell us, how has your cosmopolitan bringing helped you in finance or general life in general,
I think it's it's made me realize that you've got to be humble, because every place that you go to has its own flavor and it has its own set of things that teaches you, and that's very important, to keep your ears open so that you can actually take in what your surrounding is trying to tell you.
My God, my God. By the way, none of this is practiced. Fully on the spot, real time. Ms. Poddar, fantastic again. Thank you so much for your time.